Thank you for joining the FY2024 second quarter financial results briefing of GREE Inc. I am Toshiki Oya. Looking at the executive summary on page 2, we posted quarterly net sales of 14.2 billion yen, operating income of 0.8 billion yen, and EBITDA of 0.9 billion yen, in line with expectations. We will provide detailed summaries of each business segment later, but I'd first like to provide a quick summary. In the game and anime business, sales and income declined Q-on-Q on title closures and the winding down of the impact of anniversary events held in first quarter. In the metaverse business, sales and income declined Q-on-Q on a reactive decline in sales in the platform business following an anniversary campaign in first quarter. In the DX business and the commerce business, sales and income rose Q-on-Q. The investment business posted a small loss at the operating level as no large-scale distributions were received. On page 5, we provide an overview of financial results for second quarter FY 2024. Net sales and operating income declined Q-on-Q. Page 6 shows trends in net sales and operating income. On page 7, we have an analysis of sales and operating income by segment. Second quarter results in all segments came in higher than the segment forecasts provided at our first quarter FY 2024 results briefing. On page 8, we present an analysis of operating income in the second quarter. There was a sizable impact from declining sales, especially in the game and anime business. On page 9, we break down our cost structure for the second quarter. Variable costs declined due to declining sales, but advertising costs rose as we strengthened promotions for mainstay title Heaven Burns Red. Fixed costs also declined Q-on-Q, mainly due to receipt of payments for game development collaboration. Page 11 shows our earnings estimates and forecasts. Our third quarter FY 2024 segment forecasts are as shown here. Excluding the investment business, we forecast company-wide operating income of roughly 1.5 billion yen in the third quarter. Our full-year FY 2024 forecast remains unchanged from our forecast announced at our FY 2023 results briefing held in August 2023. Excluding contribution from the investment business, we forecast company-wide FY 2024 operating income of 5 billion yen. Moving on to page 12, here we show progress toward our full-year forecast. All segments are on course to reach our income forecasts. Now, let's hear from the heads of each of our businesses. Yuta Maeda will cover the game and anime business. First, page 14 shows sales and operating income in the game and anime business. Segment sales and income declined owing to seasonal factors, as the anniversary of Heaven Burns Red falls in third quarter FY 2024, and we saw a reactive decline from the 1.5-year anniversary event for Heaven Burns Red in first quarter FY 2024. Another factor behind the decline was the closing of Sai no Alice. Page 15 shows an overview of the game and anime business as a whole. Work on new titles shifted into high gear, and we also prepared for upcoming anniversary events for Heaven Burns Red. We also received a license to distribute the simplified Chinese version of Heaven Burns Red ahead of the launch in China. In addition, we recently began advance registration on the Bilibili Inc. platform, distribution licensee for Bilibili Inc., and this has gotten off to a very strong start. On page 16, we have WFS Inc. Sales and income declined slightly owing to a reactive decline from 1.5-year anniversary events for Heaven Burns Red held last quarter, and because 2-year anniversary events for Heaven Burns Red fall in third quarter. These 2-year anniversary events and the collaboration between Heaven Burns Red and Angel Beats, both of which began in third quarter, have gotten off to a very strong start, and we expect them to be very successful. On page 17, we have Pocolabo Inc. Income from in-game purchases halted as we closed Sai no Alice in October, resulting in a sharp decline in sales. We are currently focused on preparing for the launch of new titles. Page 18 covers GREE Entertainment Inc., where earnings have been firm owing to strong performance in licensing and outsourced development projects. On January 18th, we collaborated with Wanda Cinemas Games to release Saint Seiya Legend of Justice. We have been making strong progress on collaborative projects such as this one. The anime production business is also performing well and contributing to growth in operating income. Page 19 shows our pipeline. As we explained earlier, the launch of Heaven Burns Red in China has added a new title to our overseas portfolio. Page 20 shows our third quarter FY2024 earnings forecast. We expect growth in sales and income owing to 2-year anniversary events for Heaven Burns Red. Page 21 shows our full-year earnings forecast. This is unchanged from our original forecast. We are making smooth progress and we expect to reach our initial forecasts. On page 22, we present our medium-term targets. These are also unchanged from our original forecast. Earnings contribution from new titles in our development pipeline are factored in conservatively. Thank you for your kind attention. Next, AG Araki will explain the metaverse business. First, page 24 shows the long-term earnings trend for the metaverse business over the past 5 years. As you can see, while there has been some near-term volatility, sales remain on a long-term growth trend. Also, while we recorded losses at the operating level starting in FY2022, when we were investing in future growth, we have built an earnings structure capable of generating positive income. Page 25 shows earnings in the metaverse business as a whole. In second quarter, sales and income declined following the impact from anniversary events held by the platform business in first quarter FY2024. However, the loss posted by the metaverse business was smaller than initially expected due to progress made on efforts to improve cost efficiency. Starting on page 26, we show results at our subsidiaries. First is our platform business. While there was a sizable reactive decline from anniversary events held in the previous quarter, we continue to build an earnings structure capable of generating positive income. Page 27 covers the VTuber business. The VTuber business continues to achieve solid sales growth. The larger loss was in line with our forecast, and we are moving steadily forward with aggressive investments in this business. On page 28, we provide our third quarter FY2024 earnings estimates. Starting in third quarter FY2024, we moved the B2B metaverse business from the metaverse business to the DX business segment. We expect this to result in a decline in metaverse business sales. We still plan to keep the platform business in the black and use income generated by this business to invest in accelerating growth in the VTuber business. We expect to continue generating positive income in the metaverse business as a whole. Page 29 shows our FY2024 full-year earnings forecast. In line with the previously mentioned plan, we expect to roughly break even at the operating level in FY2024. On slide 30, we present our medium-term targets. We target continued growth, mainly in the platform business and the VTuber business, and expect the VTuber business to reach the black in FY2026, with the metaverse business as a whole generating approximately 2.0 billion yen in operating income. Thank you for your attention. Next, Kazuhisa Adachi explains the DX business. Page 32 shows sales and operating income trends in the DX business. Second quarter sales were 1.35 billion yen and operating income was 0.22 billion yen. On page 33, we present an overview of the DX business. Earnings trended down Y-on-Y but up Q-on-Q. We aim to maintain positive Q-on-Q growth by accumulating a backlog of projects. On page 34, we have the marketing DX business. Sales and operating income increased on growth in demand from marketing initiatives leading up to the year-end. Page 35 shows the operational DX business. In this business, we are focused on existing projects and earnings are trending sideways. We view securing new support projects in the operational DX business as an important challenge faced by the DX business. On page 36, we provide our third quarter FY2024 earnings estimates. We aim to continue accumulating a backlog of projects. Page 37 shows our full-year FY2024 forecast. We expect earnings to trend in line with our initial earnings forecast. On page 38, we present our medium-term targets. The current structure of the DX business is such that we are focused on securing and accumulating projects from customers, and performance therefore inevitably fluctuates in waves. We view improving our earnings structure by increasing the ratio of recurring revenue and thereby transforming our business into one that is capable of generating steady growth as an important challenge. Over the medium term, we will work toward this goal. That's all from the DX business. Next, Yosuke Nakamura will explain the commerce business. The commerce business operates a number of online media businesses. Page 40 shows trends over the past few years. In FY 2023, we completed a restructuring of our businesses and sales and income have entered an uptrend. On page 41, we isolate AMO from the rest of the commerce business and show trends over the past few years. AMO has entered a strong growth trend and we expect continued growth from third quarter FY 2024 onward. On page 42, we present an overview of the commerce business. In FY 2023, we completed our business restructuring, and this enabled us to enter an uptrend in sales and income. We offset the impact of investment in Jobda, our HR business, with growth in the AMO business and were thereby able to increase sales and profit for 2 consecutive quarters. Page 43 covers AMO, Inc. AMO is on an uptrend in both sales and income. AMO has leveraged its media capabilities to develop a SaaS business targeting restaurants and hotels, and firm growth in this business has resulted in rising sales and income. On page 44, we provide our third quarter FY 2024 earnings estimates for the commerce business. We expect sales and income to rise for a third consecutive quarter. Sales have risen to their highest level in the past 4 years, and we aim to maintain this growth trend. Page 45 shows our full-year FY 2024 forecast. We forecast annual sales of 1.5 billion yen and operating income of 0.1 billion yen. We will achieve this growth by offsetting investment in Jobda with growth at AMO. On page 46, we present our medium-term targets. Over the medium term, we intend to continue to offset investment in Jobda with growth in the AMO business and generate annual operating income of 0.4 billion yen. In FY 2026, we expect Jobda to still be in the investment phase. Thank you for your attention. Finally, Toshiki Oya explains the investment business. Page 48 shows sales and operating income trends. Owing to the nature of the business, sales and income can be volatile, and in second quarter FY 2024, as in first quarter, we received no large-scale distributions from investment funds, and the business therefore posted an operating loss of 0.1 billion yen. However, we continue to make steady investments and accumulate investment assets. Page 49 shows an overview of assets under management. AUM trended sideways, showing no major change Q-on-Q. On page 50, we provide a breakdown of our operational investment securities. This also trended basically flat Q-on-Q. In second quarter FY 2024, we invested in 1 investment fund and 12 startups. Finally, on page 51, we show the status of our investment results. At each phase, we compare net multiples and IRR with benchmarks, and, based on this, we believe we have achieved favorable performance. Thank you for your attention.